Hey folks, Dan Frio here, the rate update. Today is October 14th, 2020. This will be my last post of the week. I'm going to Myrtle Beach to do some golfing. So I'm going to take a couple days off, well-needed getaway. But you're going to be excited what's going on with mortgage rates today. And I didn't get many comments on my beard, so I need to know, to beard or not to beard? That's the question. So please comment below. Do I shave or do I keep growing? Be right back. Okay, we're going to go over what happened in the markets today. I had some people comment saying, Dan, do you do this for stocks and everything else? I don't. I try to. In the past, I was kind of trying to be a jack of all trade. I wanted to know everything about everything, the stock market, the mortgage rates, the this, the that. And I'm like, you know what? Let's just focus on one and be an expert at one thing versus just maybe kind of smart on just a bunch of things. So I won't say kind of smart, but so hopefully, I kind of know what I'm doing with this stuff. I've done it for 32 years. I have a staff of 12 loan officers, a bunch of processors, underwriters, funders, and so forth. And we are getting streamlined. We're actually caught up. So files going through. If you were with us, you should be closing within the next 2 weeks. If you were kind of backlogged. Lately, we hired, doubled up our processing staff, and we are flying through loans right now. So that being said, let's find out what happened in the markets today. So the first thing we go to is what's going on with mortgage-backed securities. We love this number. Why? Well, it's because we love when the market is green. That means the price of bonds are going up. When the price of a bond goes up, it drives down the mortgage rate or the rate of return. I'll explain it real quick for those newbies out there, and I greatly appreciate you guys that watch every day. So I'm not trying to be redundant. But for the new people out there, we got to make sure that they know the lingo, what we're talking about, why we do what we're doing. So I'm going to take a minute just to explain all of this stuff. So how bonds work let's go back, how do mortgages work? Well, the biggest component of a mortgage rate is mortgage-backed security yields. Okay, what that is, it's a batch of mortgages, just thousands of mortgages put together and it's then created into or turned into a bond offering on Wall Street. They sell that off, and depending on the yield that bond gets when they sell it off, that determines the mortgage rates. Okay, that's in simplest form. There's a lot more components to it. So now, how do bonds work? Why do we say we like when the price goes up? Well, you're thinking, when the price goes up, isn't that going to cost me more? No, because here's what happens. The more you pay for the bond, the lower your rate of return or the lower the mortgage rate. Let me make it simple. So today, I want to buy a bond that matures in a year, say, and it's a $100 bond offering. So today, let's say I pay $50. In a year from now, I get $100 back. What's the rate of return on that? 50%, or 100%, I'm sorry, 100%. I doubled my money in that duration of time. So that means my rate of return was 100%. So let's now flip-flop this and say I give you $100, and a year from now, I get $100 back because that's the bond price, or that's what I bought. You're like, that doesn't make any sense. You give them, you invest 100 and you get 100 back. So what's that rate of return? Nothing. You didn't get anything. Exactly. So see, the lower the price we pay, the higher the yield. So we love when the prices go up. That's my 1-minute lecture on that part of it. So let's get back to it. So here's what we follow. We want to see what the trend is and what's going on with this number right here, the mortgage-backed security price. Okay? So we follow it. I'm going to really try to focus on short term because mostly everybody watching my channel, it's realtors, loan advisors, and a lot of consumers. They're saying, Dan, this is a confusing process. However, we're investing $2, $3, $4, $1 million in a home. We're trying to get financing that makes the most sense, and we want to learn. So that's why I'm doing the channel. So we're going to look short term. So I'm going to give you some figures here. All right. So we're going to look at some things. If you see these red lines right here, this red line right here, well, just one red line, and there's another line right here. Okay, these are what we call Fibonacci levels. These are basically bumpers or a ceiling and a floor of where we should be trading. So we should be moving about in this area through like this. Okay, so that's what's happening there. And we're moving through there really well. Okay, so now there's other things that we follow in this chart. And there's a reason why I'm focusing on this chart. Let me be your mortgage advisor and let me worry about the rate that we're going to get. Because let's say today's rate is 3. But if I'm seeing a trend here that's working in a good way, and I might say, you know what, I'll get you 3. But if we hold off for a couple days, I wonder if I got you 2.8 and saved you an extra $100 a month. Would you be interested? Most of the time you'd be like, yeah. So that's what I do on here, and that's why I do this every day, all day, and I focus on these charts. And this gives me a lot of insight on what's going on, plus a lot of other things that I subscribe to, newsletters. This software alone is about $1,000 a year, and for different components and charting systems and all kind of analysis and everything. So let me do this for you. You have your own job to do. All right, so this gives us the ceiling and the floor. Okay, so now there's other things we want to monitor. If you see this right here, this right here is a 100-day moving average. It's purple. You go up to here, it says 100 DMA. That's days moving average. Okay, so the average, if you average up all these numbers over 100 days, that's where we are. The next one is a black signal here, and that's a black line right here. You'll see it right there. Okay. And then that is a 50-day moving average. And then we have brown, which is a 25-day moving average. Well, you're seeing there's a lot of consolidation right in the 25 and 50-day moving average. So that's where we should be trending right now. We should be pretty stable right in this area right here. Okay? And we are, because the Federal Reserve is doing a great job at it. So you can see we're going up a little bit, but then we come back down, come back through here, and then we go up above it a little bit, hit the ceiling. We've hit the ceiling several times. Right here, right here, right here, right here, right here, and stopped, and right here. You can see this is the Federal Reserve's doing a fantastic job, and the market is saying, you know, we're not going to really exceed this. So again, the higher this goes up, the lower the rates. So we basically have bottomed out for the past month or two. All right, so I don't really see anything happening until the election, unless some huge stimulus plan comes through, or we have pandemic 2 with the flu season on top of it that can cause a worldwide catastrophic events. But all that being said, we should be pretty stable. So that's where we've been, okay? And that's where we're trending. This is what's happening to the price of the mortgage-backed securities. Again, green is up, red is bad, but we've been consolidating right here. Okay, so that being said, what news came out today? Well, some economic news came out. The Dow didn't do very well. It was down 165 for the day, and the S&P was down 23. But some news that came out that kind of shocked the system a little bit, but didn't really play much havoc on things. Stock market down 165, whoop-de-doo. It probably didn't affect most people. But the producer price index, this is a major index that monitors inflation. What's going on with inflation? And you can see it here. The previous month came in at 0.3, and the consensus was, no, this is old data. It has not updated yet. Hold on, let me go back to here. Basically, the producer price index came in at 4. It was expected to come in at -2. That's hot. Okay, that's a hot number. What I mean by that's a prices on producer prices has driven up. The good news is, or the thing where I don't think it should really cause concern, is the biggest piece of that puzzle was logistics, or was freight. It was getting products from one place to another. And that's kind of an anomaly right now. So I don't see that continuing to go in that fashion. Okay, so I'm not concerned about inflation at all. So basically, on the mortgage rate front, I don't see really anything going. We're going to teeter above all-time lows and back to all-time lows and back above it again and just teeter through there. Nothing should be really majorly changed. So the news that came out today is basically the same thing. Sideways streak continues with rates, really nothing going on. We go to the chart that I follow every day. This is another market analysis tool that I use, and it's saying that 30-year conforming rates are currently at 2.88%. The 1-day delta means change, is it was down 3 basis points. And on a 7-day delta change, it was down 2 basis points. From a year ago, that's the numbers over here, we're down almost a 1% across the board. You know, we're teetering on those numbers between 0.92 and 0.62. But you know, the majority of loans out there right now are conforming in government loans, which is FHA and VA. So that's what's going on right there. So now let's get on to where my rates are today. And here we are. So let me break down how I did my rates and how I post on a daily basis. If you go back to my video on last Friday, which I forget what date that was, I think it was like the 9th, I really broke down a rate sheet. So if you go back to that video, and I'll try to attach it right up here, you can see how crazy it is to try to figure out your own rates. So basically I want to make a point on this video. So I'll get to it and then I'll kind of come back a second and explain the point I'm trying to make. Okay, so what my rate sheets are, and that I'm going through right here, is I have up here the first caption is purchase or rate and term. The loan that I'm focusing on down here is if you're looking to buy a house or you're just looking to refinance your current balance of your mortgage to a 30-year term. Okay? This right here is the credit score. If you have a 740 credit score or higher, that's what the plus is. And then I have an 80%. This 80% factor means your loan to value. What is loan to value? Well, basically it is your loan amount divided by the value of your home. Okay? So if you have a $100,000 loan amount and you have a $200,000 home, 100 divided by 200 is 50%. So you have a 50% loan to value. Okay, so that being said, here's what I got. Today, and you notice if you go back from yesterday, our rates are starting to dive down again a little bit. If you're already locked in, guys, you're probably better off with those rates than you are here. But this is what I am with today's rates. 740 credit score at 80% loan to value on a purchase or rate and term. You're looking at 2.75% rate, 2.752 APR, and a 700 credit score. That rate is 2.99. And at a 660 credit score, that rate is 3.625. Okay, so now you get an idea of what we're doing here. I want to make you aware that the lower your credit score, the higher the rate, the higher the risk for the lender, and that's why we charge a higher rate. Okay, so at the beginning of the video, I went through why do we watch the mortgage-backed securities market? Well, because that, like I said, that's one of the biggest components that make up your mortgage rate. The other components is what we call loan level price adjustments. We price to risk. So the lower your credit score, the higher the risk we have. The different kind of properties. For example, a single family primary home has a better rate than a 4-unit investment property. Less risk, has a better rate. So there's a whole bunch of multiples and factors involved that change your rate. So when I ask you saying, I need to know your loan amount, your house value, what kind of property it is, what is your credit score, so I can figure out what rate I can quote you. There's a reason I ask for all of that information, okay? So down here you're gonna notice I say cash out. Okay, this is if you're looking to, again, up here it was looking, you're purchasing a home or you're doing a rate and term. Basically, you're taking your current balance and just we're redoing the rate and term on that balance. Down here, you're looking to pull out money. So you want to consolidate some debt, do a whole bunch of other things. That being said, same thing, so the factor is $250,000 and 75% loan to value, 740 score. So let's start off. Where are we with things? So at that, right there at that breakdown, we're at a rate of 2.875, APR of 2.99. At a 700 credit score, we're at 3.125. 660 credit score, we're at 4.375. Look at the difference. It's a 1.5% rate differential between 740 score and 660 score. Okay, it's not just me. It's all lenders throughout the whole country. Okay, that's how we factor in. That's why we need to know what your rate is, what the value of your home is, what the loan amount you're looking for, all those things. So these were my 30-year terms. So now we go to the 15-year term. Same thing, 15-year. The top portion is purchase and rate and term. 740 credit score at 80% loan to value, you're looking at 2.375. 700, same rate. 660, we're at 2.5%. If you're looking to cash out, 740 is at 2.5. 700 is 2.625. 660 is 2.75. If you notice across the board right through here, our rates dropped about between 0.125 and 0.25. Might not seem like much, but we were already, if you watch a lot of my videos, we already have almost probably in 90% of the cases, the best rates in the country already. So now we get on to my government programs. So these are FHA and VA. So when you're doing an FHA loan, you can go up to 96.5%. So if you're looking to buy a house, a lot of times we put you into this program because you only need 3.5% down. So 3.5 plus 96.5 equals 100%. Hope you get what I'm going with on that. All right, so if you have a 740 credit score with an FHA loan, you're looking to buy a home, rate's 2.5. 720, 2.5. 680, still 2.5. 600, 2.75. Not bad. Look, if you notice above on a conventional rate, this is probably a point lower than it is up there. So that's why many times we push you into an FHA loan. I won't say push, we put you into an FHA loan because it makes sense. My rates on VA are the same. But with VA, you can go up to 100% financing if you're looking to buy a home and or refinance a home and pull out cash. Phenomenal product. The rates on a 740 credit score is 275, 720 2.5. Oh, this is 2.25. Let me fix this. Well, this is 2.25. I'll try to make a caption above. And a 600 score is 2.75. I'll make that adjustment. I apologize. So we're going to have to scrap that section right there. Well, it's basically right here. It's 2.5. All these should be 2.5. So we'll scrap that and I'll try to make an adjustment there. Then we go to the jumbo. This is what we're going to be known for. I'll tell you, I'll go out on a limb right now and tell you within the next year, we should become the #1 jumbo lender in the country. Because I research the web everywhere and anywhere and try to find the better rates, and I can't find them. So if you need a jumbo loan, that's a loan over about $510,000. We go up to a couple million. We're the place to go to. Okay, so I'm breaking it down right here. We have special programs out in California where you could go up to $1 million at 95% loan to value. That means you can buy $1 million home with 5% down. Okay, call us and I'll show you how to get into that program. That is our probably #1 product. But getting to our jumbos, we have if you're looking to purchase or do a rate and term, 780 credit score at a 75% loan to value. I'm basing this on $1 million loan. Rate's 3. 30-year fixed. This isn't an ARM or a hybrid or an interest only. This is a 30-year fixed rate. 760, 3.125. 740, 3.25. 720, 3.375. Phenomenal rates. So that's my rates for the day. Now you're like, Dan, I love it. What do I do? How do I get a hold of you guys? Because I need help. Okay, a couple of different ways. If you're looking for some help, we can help you get pre-approved for a house. We can do it within probably 15, 20 minutes. We have a new app. I'm going to try to put the link below so you can do that, or you can email, or I'll give you that information here in a minute. You can basically do everything on your phone. It's awesome. But probably the best way to get us right now is go to our website, and the website is therateupdate.com. Okay, I'm going to show you that in a minute. I'll give you an 800 number you can call. You'll get somebody. I have 12 loan officers. Somebody's always on call. Okay, so you'll get somebody at some point. Another way is I ask people to do this. Email me. Give me your scenario. But again, the pieces of the puzzle I need. What is your credit score? What is your loan amount? What is the house value? What term are you looking to do? What are you looking to do? You want to pay off some bills, so you're cashing out? You looking to just do a rate and term? What are you looking to do? All right, one of the biggest pieces of the puzzle a lot of people don't know is, I don't know my credit score. I kind of get my Discover card bill or whatever, but I really don't know what my credit score is. I have a sponsor of the show. It's the creditscoresandmore.com. It's plural, creditscoresandmore.com. Doesn't cost you anything. Just go there, click step 1, and just complete the information. It'll take you 3 to 4, maybe 5 minutes tops. It'll give you your credit score. Let me know what that credit score is. If it asks you if you want to sign up for any other stuff, that's your choice. It doesn't ask for a credit card, doesn't ask for anything unless you want to upgrade, and it doesn't drive you nuts to upgrade either. So that's it being there. So now let's get on to my website so I can kind of go through this with you. The first thing, how do you get a hold of us? Well, if you want to get the ball rolling right now, just click the Apply Now button, and it'll take you to an online application. It is secure. Once you're done with that application, based on the loan that you're trying to get, it'll say, I need some documentation from you, and what that documentation is, you just drag and drop it right in there. Okay, that's probably the easiest way to do that, or get a free quote right here. If you want to call, we got an 800 number. It's 844-775-LOAN. It's 844-775-5626. Or let's say you're in the middle of refinancing right now, and you're like, Dan, I got this loan estimate or got this fee sheet, and I really want a second opinion. How can you review this for me? Well, email it to me. My name is Dan Frio, so you can email it to me at dfrio, which is Frio, at preferredrate.com. We have a whole bunch of information on the website. If you want to do mortgage calculators, you want to do anything you need, the options up here are phenomenal. So that is it for today. I'm going to leave you at that. Again, I'm going out of town tomorrow, so I won't be posting. I will be accessible. If you need me, please email me. I'm not taking any calls because I'm just going to enjoy 2-3 days off. But if you email me, I promise you I'll get back with you, or I'll have one of my assistants get back with you and give you some answers or give you updates on file if you have any files in. So God bless. Thanks a lot, guys. We did hit the 10,000 subscriber on Monday, and I want to thank you guys for that. So take care. Hope to see you soon. Bye-bye.